You've got quite an aggressive $116 Brent target for the second half of this year. What's going to drive prices to that level?
Oh, we absolutely need to see the China reopening continuing. It's just started. It's the early days. We have to see the momentum continuing. And the biggest catalyst for the move higher is going to be the draw in inventories. We're not bullish the first half of the year. We have built a lot of inventory that needs to be run down. But once that has been run down, there's very thin buffers, be it spare capacity, be it just, we've also exhausted an enormous amount of SPR. Of course, governments can do a little bit more, but we've released 270 million barrels of crude and products SPR combined last year. So I think those two factors, the lack of SPR and the reopening of China, will be the catalyst for the second half of the year. But the first half, we need to see inventories that have built up come off first.
How much of a signal, Amrita, was the Saudi increase in the OSPs to Asia? Is that telling you that the demand signals from China are unequivocally bullish?
I would say, look, the Saudi OSPs are a formula. The fact that product prices and just generally refining margins have been going up, that's why the OSPs are higher. And yes, that is a sign that demand is stronger. The expectation was for OSPs to rise, and that's exactly what has happened. So it's not out of stink or out of expectations. If you're looking for real proof that China is growing, you really need to look at Chinese product exports that are set to plummet in March. Diesel potentially going from as much as 2 million tons in February to less than 500 KT in March. Real signs that China's domestic demand is soaring right now, and it's just the start. It will continue for the rest of the year.